Hello everyone. Today I am continuing the topic bank reconciliation statement. In the previous class, we have discussed the meaning and the reasons for differences in the bank reconciliation statement. And today we are going to learn an important term in the bank reconciliation statement, that is favorable and unfavorable balances in bank reconciliation statement. Now we will see the meaning of favorable and unfavorable balances in BRS. In a bank reconciliation statement, the term favorable and unfavorable balance, it refers to the position of cash in the bank, position of cash in the bank as per the cash book that is maintained by the business, and the bank statement, it means that is provided by the bank. So, favorable and unfavorable balances, it refers to the position of cash in the bank as per the cash book and the bank statement that is provided by the bank. Now we will see what is the position of cash. See here, position of cash, it means whether the business has a surplus or a deficit balance as per its cash book and bank statement or passbook. So it is nothing but position of cash. It means whether the business has a surplus balance or a deficit balance as per its cash book and bank statement, or we will call it also the bank statement, also we will call it as a passbook. So first we will see the favorable balance. Means what? It is a debit balance, positive balance. Means surplus balance, that is favorable balance. A favorable balance, it means that the business has money in the bank. Favorable balance means what? Business has money in the bank. This occurs when the bank balance in the cash book shows a debit balance. So when the favorable balance occurs, it occurs when the bank balance in the cash book, means when we prepare the double column cash book or triple column cash book, we have to draw one more column that is related to bank. All the bank transactions we will record in the bank column. Okay, so when the bank balance in the cash book shows a debit balance. Debit balance means what? In the cash book debit balance, it means what? All the receipts, it will come in the debit side. See here, when we prepare the cash book, this is a single column cash book. Otherwise in the double column and triple column cash book also bank column will come. Here we have to draw bank and cash. Here also in the credit side also, this is debit, this is credit. In the credit side also we have to draw bank and cash columns. So favorable balance, it means what? Cash book bank column debit balance, means it shows a positive balance. See here, debit balance means receipts. It is nothing but receipts, they are more than the payment. It is called as a favorable balance. So bank balance in the cash book shows a debit balance. It means a favorable balance. Means receipts, they are more than the payments. Okay, this is about favorable balance. And in the bank statement, what happens? See, in the bank statement or passbook, see here, yeah, I have, see, passbook debit all withdrawals and credit all deposits. Means in the passbook, the favorable balance, it means what? Deposits, they are more than withdrawals. Deposits are more than withdrawals or payments. See here, cash book bank column debit balance, it means favorable balance, and bank statement or passbook credit balance. Here credit balance means deposits. So passbook, it is just exactly the opposite of cash book. In the cash book, all the receipts will come in the debit side and payments will come in the credit side. Here in the cash book, favorable balance means receipts are more than the payment, and in the passbook, favorable balance means credit balance, means deposits they are more than the withdrawals or payments. Okay, I hope this is clear to you all. This is about favorable balance. Now I will take one example of favorable balance. It means what? Positive bank balance in the cash book. Here XYZ Limited maintains a cash book, means in the bank column, and records the following transactions. Opening bank balance is rupees 50,000 and received. Opening bank balance means we have to enter in the receipt side, means debit side. Received rupees 30,000 from a customer and deposited it into the bank, means receipt customer deposit, that is rupees 30,000 debit side. And issued a check of rupees 15,000 to pay for office supplies. Here issued a check means it will come in the credit side, means in the payment side. And bank credited rupees 2,000 as interest. Here bank directly credited rupees 2,000 as interest, means it will come in the receipt side, means in the debit side. And paid rupees 10,000 for electricity through online transfer. It means what? Here paid means it comes in the credit side under payments, that is rupees 10,000. Now we will record the transaction. First one, opening balance. Debit, credit. So here this is the cash book and we are entering the bank transactions in the cash book. Okay, opening balance, that is rupees 50,000 in the debit side. Here debit in the receipt. And received rupees 30,000 from a customer and deposited it into the bank. See here, received rupees 30,000. Customer deposit, that is rupees 30,000. See, write down here 50,000 balance and customer deposit, that is rupees 30,000. Here we need to add the customer deposit. Next one, issued a check of rupees 15,000 to pay for office supplies, means it comes in the payment side, that is less issue check for office supplies, that is rupees 15,000. We need to deduct, that is because we are issuing a check. And here bank credited rupees 2,000 as interest. Bank credited means it comes in the debit side. Add interest, that is rupees 2,000. Okay. Next one, paid rupees 10,000 for electricity. Here means paid, means it comes in the payment side. Sorry, here issue check for office supplies, it comes in the payment side. We have to record the amount in the payment side, that is rupees 15,000. Next one, less paid for electricity through online transfer, that is rupees 10,000. We need to deduct, that is rupees 10,000. See here, 10,000. Now we have to see whether this is a favorable or unfavorable balance. See here, receipts, that is equals to how much? Receipts, they are 30,000, customer deposit and interest, that is rupees 2,000. So total receipts are 32,000. Total receipts 32,000. And payments are electricity 10,000 and here issue check for office supplies, that is rupees 15,000, means total payments are 25,000. See here, it clearly shows that receipts are more than payments. receipts are more than payments, means debit side is more than payment. It means what? It means favorable balance. It means favorable balance. And in the bank statement, what happens? Bank statement, see the rule. Bank statement, credit balance. It means what? It means favorable balance. Now we have to check the bank statement. Bank statement also, see, customer deposited into the bank, that is rupees, deposits, it will come here, deposits, and here withdrawals. Deposits, that is rupees 30,000, and credited rupees 2,000 as interest, that is rupees 32,000. Here debit and here credit. And withdrawals, issued a check of rupees 15,000 to pay for office supplies, means that is rupees 15,000 withdrawals, and paid rupees 10,000 for electricity through online transfer, that is rupees 10,000. It means that is rupees 25,000. See here, the deposits, they are more than the withdrawals. It means bank statement showing a credit balance. It means a favorable balance. Okay, I hope this example is clear to you all. This is about favorable balance. Now let's see the unfavorable balance. Here we will call unfavorable balance also as a bank overdraft. Bank overdraft. See here. An unfavorable balance, it means that the business has withdrawn more money than it has in its bank account. It means what? Business has withdrawn more money than it has in its bank account, leading to an overdraft. It leads to overdraft. In this case, the cash book, it shows a credit balance. Cash book shows a credit balance while the bank statement shows a debit balance. Means what? Cash book, bank column, in the cash book, the bank column shows credit balance. It means what? Overdraft, means unfavorable balance. See here, in the cash book, credit balance. In the cash book, credit balance means payments are more than the receipts. This is called as unfavorable balance. And in the bank statement or passbook, it means what? Debit balance. See here, in the passbook, debit balance, it means withdrawals. It means withdrawals, they are more than the deposits. Here, less deposits and more withdrawals in the bank statement. It will call it as a unfavorable balance. Now I will explain this unfavorable balance through one example. See here, ABC Limited maintains a double column cash book with a bank column as of Feb 2025. It has an overdraft of rupees 20,000. Here see the transactions. Issued a check of rupees 15,000 for office rent and deposited rupees 10,000 from a customer into the bank. Bank deducted rupees 2,000 as interest on overdraft and paid rupees 5,000 for utilities through bank transfer. See here, first one has an overdraft, that is rupees 20,000, means we have to write down in the credit side, that is overdraft. In the bank column, write down in the bank column, cash bank. See here, cash and bank overdraft, that is rupees 20,000. Next one, issued a check of rupees 15,000 for office rent. Issued a check means it comes in the payment side, means in the credit side. Office rent, record the amount in the bank column, that is rupees 15,000. 10,000. Next one, deposited rupees 10,000 from a customer into the bank. Deposited means we are receiving the cash. Means receiving the cash, but the customer directly deposited that amount into the bank. Means it's come in the debit side. Means in the receipt side. Customer deposit, that is rupees 10,000. In the bank column, we have to record the amount. Next one, bank deducted. Here bank deducted rupees 2,000 as interest on overdraft. Rupees 2,000 as interest on overdraft. So in the credit side we have to enter because it is deducted the amount, that is rupees 2,000. Next one, paid rupees 5,000 for utilities, that is bank through bank transfer. Paid means payment side. Utilities rupees 5,000. Rupees 5,000. See here. So in this problem, payments are, that is equals to, see here, 15,000, 2,000, 5,000, that is 22,000. Payments are 22,000. They are more than the deposits. More than the deposits, that is rupees 10,000. It means what? The overdraft has increased to rupees 32,000. The overdraft has increased to rupees 32,000. Means the business must repay to the bank, that is rupees 32,000. See here. Here total 42,000 will come and here 10,000, means here 32,000. Rupees 32,000 the business must repay to the bank. Here payments, they are more than the receipts. So it is an unfavorable balance. See here. The rule is cash book, bank column, credit balance, overdraft. Credit balance. See here, credit balance. It is more than the debit side. Payments are more than receipts. It is called as a unfavorable balance. And in the bank statement, what happens? In the bank statement, debit balance. In the bank statement, debit balance is called as a unfavorable balance. See here in the bank statement, what happens? All the withdrawals comes in the debit side and all the deposits will come in the credit side. In the credit side. So here withdrawals means we have to write down the overdraft, that is rupees 20,000, office rent 15,000, interest 2,000 and utilities 5,000 in the debit side of the passbook, means withdrawals. And deposits, that is rupees 10,000 we have to write down in the credit side in the bank statement. In the bank statement. So here withdrawals, they are more than the deposits. Means bank statement debit balance, it means a unfavorable balance. So this is about unfavorable balance. I hope this example is clear to you all. Here we have to remember that favorable balance, cash in bank, that is asset for the business, because the receipts means the deposits, they are more than the withdrawals or the payments. And unfavorable balance, it means what? It means overdraft. It is a liability for business. How? Because it represents borrowed money that the business must repay to the bank. So we will call it as a liability for the business. Here in favorable and unfavorable balance, when you are solving the problems, you should remember these points. Bank column, in the cash book, debit balance, it means favorable balance, and credit balance in the bank statement, it means a favorable balance, and unfavorable balance, it means what? Bank column in the cash book, credit balance, it means overdraft or unfavorable balance, and debit balance in the bank statement, it means unfavorable balance. Okay, this is about favorable and unfavorable balance in the bank reconciliation statement. I hope this concept is clear to you all. If not, please leave a comment. Thank you.